here who you all are, but I can't see your names, and I have difficulty reading upside down, so I just might say the handsome gentleman in the corner over there. Anyway, the meeting will be webcast and a record retained on the council website. For those at home viewing the webcast, I'd like to inform you that if you look above the video, you will see a resources tab. Select this and a link to the agenda will appear on the right-hand side. This will allow you to open the agenda in PDF form and follow the discussion and debate. So, second item on the agenda is apologies for absence. There are no members absent, but we do have apologies from Cher Halewood and from Mark Stocks from Grant Thornton, who are both self-isolating. Item agenda number 3. Do any members have any declarations of interest? Oh, yes. Sorry. It's Councillor Brennan.
Thank you, Chair. I'm reassured that I'm not the only person in the room who can't see people's nameplates. So, I've got a pension with their Merseyside Pension Fund.
Okay, thanks very much. Anybody else? No? Okay. Now, I would invite members to approve the accuracy of the minutes of the meeting held on the 9th of March 2021. Is by assent, Colin? By assent? Oh, yeah. So if I can move that we agree the minutes of the meeting held on the 9th of March 2021. All agreed? Agreed? Yep. Okay, thank you very much. Item number 5, public and member questions. As far as I'm aware, there are no public questions that have been received. So we'll go on to item number 6, which is pages 21 to 44 in the report. It's the internal audit, updates, school budgets and service level agreements. And Mark Niblock will now introduce the report. Thanks, Mark.
Thank you, Chair. This is a regular report that I present to members of the Audit Risk Management Committee. It contains information relating to the delivery of the internal audit service and acknowledges the impact that the COVID-19 pandemic has had on our service delivery. This particular report covers the reporting period from March through to the end of May 2021 and concentrates on identifying the continuing impact of COVID-19 on the delivery of the internal audit service, the internal audit activity that was undertaken for the period March through to May, planned internal audit work for the next quarter, and any items of note arising from work completed. So section 3.3 of the report identify significant ongoing impact that the pandemic has had on the internal audit service, drawing members' attention to the COVID-19 work undertaken by the team and the corresponding changes that have had to be made to accommodate this. A copy of the revised internal audit plan was endorsed by this committee at the November meeting, and updates were subsequently provided at the following meetings. Section 3.7 through to 323, I identify some of the work that the internal audit section have undertaken during the period, including both the COVID-19 related work and support and scheduled audit work in key risk areas such as key financial systems, Merseyside Pension Fund, capital financing and data centre. Of particular interest within this particular section is a piece of work that's currently ongoing to evaluate action points emanating from the Liverpool City Council's inspection report, seeking assurances across the Wirral Council regarding the robustness of the working arrangements in place here. The findings are currently being drafted, or I'll say at the time of writing they were currently being drafted. They have now been drafted into a final report which is going to be presented to the Chief Exec and the Strategic Leadership Team next week. Identifies a number of actions, some of which are in train to improve systems. Findings of that particular piece of targeted work will be brought back to this committee and shared with yourselves, along with other group leaders and various other bodies. But that's something to perhaps whet your appetite and look forward to. At section 3.24, I identify some of the work planned by the team for the next quarter. As identified in the revised audit plan, this includes work on the Wirral Growth Company, some targeted work in regards to financial resilience, safeguarding and information governance, capturing and targeting work in some of the areas where risks have clearly increased as a direct result of some of the events of the past 18 months. Now, at section 3.25, I identify that there are no actual items that require action by yourselves. I'll leave this section open because from time to time, there will be kind of actions that I will be proposing that you undertake in response to targeted audit work that we've undertaken. For this particular reporting period, that there aren't any, which is something to note. I would ask you to note the report, but equally at this stage, I'm more than happy to take any questions that members may have regarding anything that's included within the reports.
Does anybody have any questions for Mark on the report? Stu?
Okay, thanks, Chair. In regards to the Treasury Building Data Centre, I'd be interested to get a bit more detail in terms of sequencing of events, i.e. has a lease been signed? If so, why have we only just audited this? And given the number of outstanding issues, where are we up to in terms of ensuring our data is secure?
The lease, Councillor, has been signed, yes. We audit the Treasury, so I have been auditing the data centre for a number of years now on a regular annual basis. We felt that we'd bring that piece of work forward because of the nature of the fact that there was a lease being sort of taken up, and we wanted to make sure that before any personnel were moved into that building from outside of kind of the confines of the council, the right controls and the right kind of mitigations were in place for any risks that were presented. We have agreed a number of, you'll see from the report, quite a number of actions to deal with some of those issues that we have an action plan in place with a very tight timescale for implementation. All of those actions have been agreed with those senior managers and are in the process of being implemented. So I will certainly come back with a follow-up update for yourselves, but I'm comfortable with the actions that have been taken, and we've been provided with photographic evidence to support many of those actions that have been now taken, kind of thing. So.
So in terms of access, I'm assuming we have 24-hour access in order to deal with any problems, and I was under the impression that the data centre had been moved. I know we've got a backup. There's a new backup data centre being that's actually been moved, but I was under the impression that the actual data centre as well itself is going to be moved. Is that something that's going to happen?
Not as far as I'm aware, Councillor. You're quite right in what you say about the backup centre, the backup data centre across the water at the Man Island there. That is still in use. As far as I'm aware, the Treasury building is still the current data centre for the council. There may very well be plans in place for that to move on, but I'm not party to or aware of those actions or plans. What I could say is that, I mean, I can go back and then make some inquiries on your behalf. Equally, this may be something that you want to consider at a future meeting, whether or not you want somebody from the digital section to come along and talk to you about what actions have been taken and what plans are proposed for the future. They're likely to be much more kind of informed than I am. We undertake a sort of, very kind of precise, targeted piece of work that looks at at the control environment over a period of a couple of weeks, kind of thing. So they will have more idea as to sort of what the future holds. So it might be something that you might want to consider for a future meeting. So.
Did you want to have a report brought?
I think it merits.
Yeah.
I think the subject merits a deeper dive into it.
So do you want somebody from digital infrastructure?
Yeah, that'd be fine. Yeah.
We could do that, Mark, maybe for September 1. Yeah.
Okay, thanks.
If I could just say as well, on one of the other major risks is the collection fund COVID impact audit review. Can you just give us an update on that and what we're going to do to mitigate it and to reduce it from major down to moderate or minor? Especially for those who are new to the committee who might not understand what it means.
Sorry, Chair. I think that particular item was covered in my annual report, was it not? Which is the next item on the agenda. But I'm happy to jump ahead if you like.
We'll go on, and then
okay.
If anybody wants to ask any further questions on that, that's fine.
Okay.
Okay, so Does anybody else have any questions for Mark? Jenny?
Thank you, Chair. In 3.6, you say that the type of operating doesn't fully comply with the requirements of the public sector internal auditing standards, which is obviously a concern. What do you think are the risks of this, and when do you think you will be back into full compliance, please? Thank you.
Thank you. All I could say is that the pandemic came from left field. Like, it caught everybody kind of on the hop. Like, we had to sort of move with a lot of pace. We had to sort of redirect our resources to make sure that we were kind of contributing in the most efficient and effective way during what was a kind of very reactive kind of period of the pandemic. So we did kind of streamline a lot of our working papers. The working papers that we would normally be maintaining, like, weren't as kind of comprehensive as they would normally be, like, to satisfy the requirements of the standards. Some of the procedures that we would normally be adopting, like, during business as usual, like, were streamlined again. Some of our interactions with clients weren't quite perhaps as kind of as robust as we would want them to be, like, and will be. We're already starting to sort of work back to a business as usual model kind of thing. So it was always inevitable kind of thing, but during the midst of the pandemic, it would have been very difficult. We were acknowledging of not just the limitations being placed upon myself and my team, like, but also the auditees themselves, like, who were being demanded or being required to sort of, respond to and react to all sorts of unprecedented sort of challenges elsewhere. The last thing that they probably needed at that moment in time was auditors crawling all over them and wanting to distract them from some of the kind of the more important issues that were on the table. So we've clearly kind of streamlined some of the audits as well. And again, we're mindful of the fact that some of those audits were streamlined and reduced in terms of their scale and comprehensiveness. When we kind of revisited the plan, like, and we started to plan going forward, like, we pick up on that slack. We build into the programs that we're going to be conducting over the next kind of 6, 8 to 12 months some more comprehensive work in those areas. We know exactly where they are and we know what's required of us, kind of thing. So this isn't a situation that's unique to Wirral. Like, I talked to sort of 26 of my colleagues across the northwestern region, and we kind of regularly meet up on our sort of, and have been doing on a monthly basis to discuss the approach. I've had numerous conversations with the professional bodies, SIPFA and the Chartered Institute for Internal Auditors, as to sort of what we needed to do to ensure that we were compliant with the revised kind of public sector internal standards, shall we say. Like, there was an acceptance nationally, like, that we weren't going to be able to operate in the way we would do during normal circumstances, like, and that's reflected in the annual report that will be presented to yourselves as the next item, and the opinion that I provide there. What supports that opinion is slightly different to what it would be under normal circumstances. I've relied on other activities. I've relied on my observations of the work of the council's senior management team in terms of the governance arrangements that they put in place to address the sort of the pandemic related issues that were presented. So it's been an unprecedented, difficult time, like, and I just wanted to make sure that you were aware of, and other stakeholders, the fact that we weren't operating to normal standards, and we weren't going to be fully compliant with what was previously in place in terms of those public sector internal standards. So, but we're back on track. We're back sort of starting to work in a more kind of focused and structured way. So, does that answer your?
So my question was twofold. It was about the inherent risks that you think are there because of that, and I'm sure we all accept the challenges of COVID. There's no question of that, and your lack of being welcome is probably the role of an internal auditor per se, but even more so within the heightened time of COVID. That's understandable, but still your job remains to be an internal auditor almost regardless, and in a sense there's a heightened element of risk potentially within COVID times. Yeah.
What I would say is that during those kind of difficult times, like I should say, during the midst of the sort of pandemic, like, whilst we might not have been operating like on a fully in compliance with those kind of standards, along with all of my colleagues up and down the country, kind of thing, we were still operating as auditors. We were still either inputting to developing systems that were being developed on the hoof to address the challenges being presented by COVID. We were also kind of involving ourselves with kind of the clients more directly in terms of the payment of business grants to local businesses, to make sure that the controls were in place to make sure that those payments went out in the correct fashion, that they weren't being subject to any potential fraudulent behaviour out there. And there was a lot of that happening up and down the country. So it's whilst our activities were different, like on there, they were targeted at the key risk areas, like on there, and there's been a lot of activity in those areas. Where we've not been able to conduct some of the business as usual kind of work, like on there, I mentioned earlier that we've maintained a kind of record of those areas. We've identified where there are kind of risks associated with our reduced activities, shall we say, like, and that's when we'll be sort of picking those up, like, when we move forward. So I'm confident that the key risks, like, we were involved with throughout, like, we had a significant, strong input to the development of the controls, and where we haven't, where there are risks presented of a slightly different nature, we either pick those up, like, or we'll be picking those up as we move forward. There are various activities planned over the next 6-8 months, like, that will pick up on those. So I will be bringing you those kind of reassurances, like, and allowing you to sort of challenge me, like, from meeting to meeting. But I'm comfortable with what we've been able to achieve, like, and what we've got in place going forward. So.
Chair, thank you. Mark, sorry, I missed the earlier response. You're inviting someone in to give us a response on the hardware side. Does that include the software side too? Because I see that you flagged that up as well.
Yes, we could do both. Sorry, in response to your question, we could and should do both, I would say. The question from Councillor Whitting was specifically in relation to the Treasury building, and predominantly, as you quite rightly point out, they were the kind of the hardware controls, the access controls, and kind of some of the economic related issues that were being presented. But certainly in terms of information governance, which I think is what you're also kind of alluding to there, the same people from within digital have a responsibility for that. So there's no reason why, when we invite them along to the meeting to talk about what progress has been made to address some of these underlying risks there, they couldn't do both. So it would make perfect sense in my view.
Right. Does anybody else have a question for Mark? No? Okay, then the recommendation is that the Audit and Risk Management Committee is recommended to note the report. And so we'll go on now to agenda item 6 or 7, whichever one you want to call it, because it's the Audit and Risk Management. Oh, sorry. Was that agreed? Oh, was that agreed that we note the report? Thank you. And so now we'll go on to the Corporate Risk Management Update, pages 45 to 54, and Mark will be giving us, will be presenting the report on that and inviting questions and comments from the members. Thanks, Mark.
Chair, can I just query the agenda there? On my agenda, I've got item 5 as being my annual report, and item 6 as the Corporate Risk Management Update. I'm doing both, but I'm not sure which one of us got the wrong.
So it's that agenda item 6 in our pack, but it's agenda item
5
on this one.
Oh, right, okay.
Which is
Right, okay, I can happily do that.
It's classed on 2 fingers, separate items.
Right, no problem. I'll do that now. Okay. Sorry about that. This is, again, a regular report that one of my colleagues, Helen Turner, who's the Risk and Continuity Manager for the Council, would normally be presenting to yourselves. Unfortunately, Helen can't be with us this evening, so I will be presenting this on her behalf. It's a regular report that she brings that basically contains information relating to the delivery of the Council's risk management arrangements. This particular report covers the reporting period March through to May 2021 and concentrates on providing you with information relating to the risk appetite workshop that's taking place across the Council, the work of the members subgroup, and the corporate and departmental risk registers. Now, at section 3.2 of the report, what's identified there is work that's currently being undertaken with Zurich Municipal, who have been commissioned to undertake an exercise to identify and evaluate the council's risk appetite. The initial session has been completed with the strategic leadership team. That took place on Tuesday of last week. More sessions are scheduled to take place across the corporate management team and ultimately with members over the coming months. Dates will be set aside and sessions arranged for you, certainly as members of this committee, to be contributing to and inputting to that process. It's a process that's been utilised at various public bodies up and down the country by representatives from Zurich Municipal, and they have a number of, they've developed quite a lot of expertise in this field, so we're hopeful that and expecting them to sort of provide us with a reasonably good sort of detailed overview of the overall risk appetite, but equally risk appetite across the various different types of service that are available, because that appetite will vary from service to service. An update on the findings from the exercise will certainly be reported to yourselves, I say, and members of this committee will be involved in that exercise as we move forward. Now, at section 3.9 of the report, I draw members' attention to the ongoing work of the Audit and Risk Management Committee's risk subgroup. Meetings will have gone out this week from Helen with regards to the next 2 or 3 sessions that are scheduled. And these are sessions to allow you to have an input directly have an input to the corporate risk register and departmental registers as are, to challenge, to question in a little bit more detail in relation to the mitigations that have been identified, the scoring of those kind of risks, and whether or not, in your view, those risks represent the most significant risks to the organisation. Section 3.12, the report identifies that work is currently being undertaken to develop the departmental corporate risk registers, including the important linkages to the Wirral plan. A copy of the current corporate risk register as it stands is attached to the report as an appendix and demonstrates the ongoing works that is in progress to revisit and rescore the risks identified on the register as at the end of Q1. It is anticipated that much more work will be undertaken on this and more work will be undertaken at the risk subgroup, which I've just alluded to. That risk subgroup workshop is scheduled to take place very soon and will provide you with an ideal opportunity to involve yourselves directly in that exercise and have a direct input to the work that's undertaken. Members are asked to note the reports, but again, I'm more than happy to take any questions that you might have on behalf of Helen.
Anybody got any questions for Mark on that one? Yeah, do you want to go ahead, Councillor Brennan?
Thank you, Chair. Mark, I just wanted to ask about the process whereby you arrive at the corporate risk register. Specifically, is that something that's done by the executive, and how does it tie into our governance arrangements?
The exercise involves the strategic leadership team working with Helen, who will facilitate and oversee that kind of that operation. It also involves her talking to various members. There will be sort of engagement with members of this group through the risk workshops that I've alluded to make sure that their thinking is in tune with that of the strategic leadership team, to make sure the risks that are identified by them, in your view as members, represent where the most significant risks are being presented and are being handled in the correct fashion. So it is a fairly well-established process that Helen has developed in the 18 months that she's been with us, kind of thing. She brought with her quite a lot of skills and expertise from working at various other public bodies around the country. So it certainly is intended to be comprehensive, to cover both the leadership and the membership.
Sorry, just a follow-up on that, and I guess it's more of a question for you, Chair, than it is for Mark. It seems to me that we would want the policy committees to have on their forward plan a discussion about the mitigation of the key corporate risks that relate to their committee. So, for example, I'm on children's, and one of the key risks is educational catch-up after COVID. So I'd like to know what action you've taken, Chair, to ensure that chairs of other committees are aware of the contents of the corporate risk register and they've got it actioned on their forward plan. Thank you.
I think, Mark, normally that would go through you, wouldn't it, to all the individual chairs, and that would be brought through to me when Mark and I have discussions with the Deputy Chair to bring forward onto the next Audit and Risk Committee meeting. We're always looking at this, and so it's a movable feast really when it comes to governance issues and the corporate risk register. And most members will be aware in their committees what they think will be a governance issue and an issue that needs to be raised with Helen for the corporate risk register. There are items going ahead at the moment that will be brought forward onto the corporate risk register that are being looked at the moment in terms of GDPR and other issues that reports will be done that relate to each of those committees. And so for all of the members that are on different committees and chairs of the different reports, it's up to them through their group leaders to bring those items forward in consultation with myself and Mark to bring forward onto this committee and to investigate those further as needed.
Just going to chip in a little bit to say that Helen does also work with the is targeting chairs of those committees to make sure that they're alert to the departmental risk registers that are currently being developed. So it's within their gift and remit to take those departmental registers to those committees and have the kind of conversations that you're alluding to. Certainly the corporate risks are all identified within the department. They sort of flow from the corporate registers down onto the departmental registers. So some of those sort of, all of the key corporate risks then flow down onto the departmental registers and are being dealt with predominantly by officers at that kind of slightly lower level and members at those committees.
Thank you for both of those answers. I think where I'm coming from on this is that the mitigation of risk is actually a governance question which goes beyond this committee. I think it's good that the executive may or may not choose to make chairs of other committees aware of contents of the corporate risk register, but all of the contents come here. And my view is that to close the loop of governance and to close up any potential holes in the process, it would be very helpful, Chair, if you could formally flag to the chairs of other committees issues of key risk as it relates to their remits.
The corporate risk register is a document that was updated in January and will be updated periodically. And as far as I'm aware, all the chairs of committees and the leaders of each of the parties will have access to the corporate risk register and can flag up any issues that they wish to bring those corporate risks either higher up the list or lower down as they change. For instance, the Brexit risk has been taken off the corporate risk register and others will be added on as there seem to be a risk.
I was just saying to the Chair that I think it's something that the Chair and myself can pick up at one of our regular kind of update meetings like now, and we'll get something penned that will go out to the chairs of those committees as you described. And I think it would be a good idea.
Thank you very much.
Thank you, Chair. I must say that given that we're faced with capitalisation and the directive, that I'm very surprised indeed that none of the financials are flagged as risks, because I would suggest at the moment the Council's greatest risk has got to be financial. So I would question again, really, Mark, why 15, 16 and 17 are not on your corporate risks, because to my mind they should be red flagged And I'm questioning that, because if we don't have strong financial resilience management, number 16, if we don't adhere to the capitalisation directive, number 15, and we're non-compliant with policies and procedures, number 17, then the rest of it is not going to happen at all. This council is going to be absolutely not able to function at all. So I would request that those be revisited, if you like, as a result of potentially going to red flag, given the current scenario. Thank you.
Yeah, these are clearly very important key corporate risks, and I've escalated. There's no question about that kind of thing. And that's why at the moment you'll see that the scorings associated with those particular 15, 16, 17 letter haven't been populated just yet. They're actually being worked on by the Director of Resources as we speak, kind of thing, you know, and was aware that she didn't want to produce something like that gave a false impression. It is being worked on. She's got a group of senior managers from within the team sort of looking to escalate those kind of scoring for those particular risks. And that's why they don't currently contain the risk score as described.
Chair, can I come back on that, please? Thank you. So I thought this report was fairly complete, and that we were faced with the risk register with the reds being the current reds. It seems, therefore, that it's not complete. So could we request when we can get a fully complete register, please, of all those individual areas, and particularly my main concern at the moment is financial. Thank you, Mark.
Yeah, that's no problem. I'll have a conversation with the director in the morning, kind of thing, but it's very much in hand, and it was a close call between whether or not you would get it or not for this particular meeting. And so it's not a million miles away from being where it needs to be, and every meeting that corporate risk register is presented to this committee, I'm sure that we can get it out to you over the next few days to sort of make up for not having to sort of wait around for a couple of months.
Anybody else got any more questions for Mark on that one? Yes, do you want to go ahead, Councillor Walsh?
Hi, I just wanted to ask a question on the climate emergency response. Would it be possible in future to get a copy of which senior leaders have completed the carbon literacy training?
I certainly don't have that information to hand, but there's no reason why we can't get that for you, certainly.
Thank you.
Right, in that case, agenda item 6, the recommendation is that the Audit and Risk Committee are recommended to note the report. Do you all agree to recommend the report? Yeah, thank you. Next is number 7, External Audit Plan, Wirral Council 20 to 21. And it was going to be Mark Stocks from Grant Thornton to present the report, but it's now going to be Naomi, is it? So Naomi, over to you. Thank you.
Thank you, Chair. Yes, if I may present our external audit plan for the year, and then if I can pass over to Diane Grisdale for an update on the accounts. So you're asked to note the contents of the report, and I'm happy to take any questions afterwards, or I will defer to Mark Stocks to bring to a later committee if I can't answer them at the moment. So I may take you to page 3 of our audit plan, which highlights the key matters. We've disclosed here the key issues regarding the Council's general development at present. We acknowledge the significant financial challenges facing the Council, and our focus for the value for money work will be to look at the financial sustainability of the Council. Is it taking the right action? And what level of government support is the Council receiving? Another area of focus will be the group of companies that the Council has established. We'll be looking at how the Council is managing this group and how it controls the group companies. We don't have any concerns at present, apart from noting the deficit position for essentials. Taking you over onto page 4 for the financial statements audit. We will be carrying out a standard financial statements audit where you can see we've listed the significant risks which require special audit consideration and procedures. These are detailed on pages 5 to 7. At this stage, I just wanted to draw to your attention the additional significant risk we have identified for this year, being the recognition of the COVID grant income and expenditure that Mark's already alluded to in the internal audit work they've carried out as well. We've determined that the risk of fraud arising from expenditure recognition may not be rebutted, completely, because there is a risk that COVID-19 expenditure being overstated in either through error or inappropriate claims for financial support. You will see on pages 6 and 7 of our planned audit procedures in order to address this risk. Given the current circumstances as a result of the pandemic, we'll be carrying out the audit remotely as a result of both the council staff and our audit team working remotely in line with the current government guidance. We've taken steps to improve technology over the year to enhance the sharing of documentation and continue to make good use of Microsoft Teams for team calls both with internally and with the council staff, and observing system reports being run from the finance system. Moving on to page 8 of the report, here I'd like to draw to your attention, as a result of the updated ISA 540 revised auditing standards and related disclosures, there are significant enhancements to the audit risk assessment process for accounting estimates. We're required to understand and assess the Council's internal controls over the significant accounting estimates, and this includes an understanding of the role of those charged with governance, with particular emphasis on where estimates have high estimation uncertainty or require significant judgment, for example, land and building valuations and the net pension liability, as detailed on page 9. Moving on to page 12. Here it details through the progress against prior year audit recommendations, which I'm pleased to report have all been addressed for the recommendations raised in relation to the for the recommendation raised in relation to the fixed asset register. Our planned audit procedures for this year will include a review of assets for existence to gain assurance over the completeness of the asset register. Moving on to page 14, the materiality. This page details our approach to materiality, and you will see here that we've determined at the planning stage materiality to be £10 million. We will revisit this determination on receipt of the draft financial statements to assess whether this figure is still appropriate, and we'll report any changes back to yourselves in our audit findings report. Moving on through the report, the plan, we go into more detail about the value for money arrangements, which I've already touched on at the start of the presentation. And then the final sections of the audit plan provide details of the proposed audit timescales, the audit and non-audit work fees, along with confirmation of our independence. Are there any questions?
Does anybody have any questions for Naomi? I've just got a couple that I'd made some notes on. On page 13 of the report, where you're looking at progress against prior year audit recommendations, and I know it does seem now to have actually been addressed and implemented, but I was a little bit concerned that, and I'm sure you were, that there were 443 users who had access to change system configuration when you would have expected only 13. Is that something that had gone on in the past for over a period of years, or was it just last year that it happened?
That's something that's gone over for a number of years, and I understand there's been a thorough review of that. That was picked up by our more in-depth IT audit team.
The journal control procedures, because it's very unusual to have one person inputting and agreeing it, and I know that's been changed as well, hasn't it? So there's been a lot more tightening up of the internal controls from the previous year.
Yes, that was implemented during the audit last year. That was picked up on straight away, and those procedures have definitely been put in place now.
Anybody else? Yeah, Jenny?
Thank you, Chair. Almost auditing the auditors here. I notice that your annual fees have gone up by £60,000 over from 2018-19 to 2020-21, and you are trying to explain that, and I have read about some of your justifications for that. But it will be remiss of us, I think, not to question that and query that whilst the council is in such a time as this, that your fees have gone up by £60,000 over a 2-year period. That just seemed very steep. Thank you.
Thank you, if I may, Chair. It's a reflection of the increased work that we've had to cover over the last couple of years. The council is also getting support from the government on the audit fees, and Mark can go into this in more detail if you require over the next audit committee.
Chair, if I may, the question is more about the reasoning why it has increased by such a significant amount of money, not about the money being provided by government. It's the reasoning for it, please. Thank you.
If I may, Chair, it is the level of work we've had to gain our level of assurance over the last few years has increased considerably. It reflects the challenges the council is facing at the moment as well. It works hand in hand.
Just interject that. I'm sure, I mean, obviously all of us here are going to be looking at costs. It's one of the things the council's going to have to do going forward to make sure that it balances its books and actually achieves the capitalisation directive of 10.7 million that it's requesting from the government. I'm sure part of the work that Grant Thornton have got to do is to make sure on behalf of MHCLG that the work that Grant Thornton are doing to make sure that the council is in a position to receive capitalisation is the robustness of their audit plan. And I think as well there are more requirements that have been put on Grant Thornton as auditors for councils to make sure that there is a more in-depth reporting system. So I can see why there's an increase in cost, quite frankly, because you're going to have to do an awful lot more audit work that I'm sure MHCLG will want you to provide in terms of supplying the capitalisation directive. Do you agree with that, Mark?
I would.
Anybody else? No? Yes, go ahead, Stu.
Thanks, Chair. Just a question to Mark, really. Yeah, because going back a number of years, we had the Audit Commission. Was there a cost involved in the Audit Commission coming in to audit our accounts? And you know, as far as we can go, what was the scale of charges like? Was it comparable to what we're being charged now, or?
The Audit Commission certainly did levy a charge. As to how comparable it was, it's difficult without having those figures readily available, but I know certainly when the government took steps to sort of restructure and reorganise, like under the provision of sort of external audit, like on there, the cost did reduce significantly, like kind of thing. And I think that was reflected in the nature of the service that the external auditors were able to provide for those kind of costs. So the service perhaps wasn't as comprehensive as it had been previously. What has subsequently happened is that sort of there's now an acknowledgement that there needs to be more done by the external auditors, and ergo, like the costs need to increase proportionately. So I think you probably find that the levels we're now reaching are probably of a similar-ish kind of nature to what was charged back in the day, to be completely honest.
If I may, Chair, yes, Mark's quite right. The fees were quite considerably more under the Audit Commission. The standards have changed over the last couple of years or so. I alluded to before about the estimates. There's a lot more work involved in that area of work. So it is proportional to the level of work, and with the significant financial sustainability risk, we need to review this more in a lot more detail than we would have done previously.
Has anybody else got any more questions for Naomi? No? Everybody happy with that report? Right, Naomi, so that was number 7, external audit plan. And so the recommendation is that the Audit and Risk Management Committee are requested to, number 1, consider the proposed audit plan and confirm that the arrangements set out will meet the committee's expectations with regard to providing independent scrutiny. 2, note the report provided by the auditors. And 3, note the update of the statements of accounts. And so can I have everybody's agreement on that? Do you all approve? Yep. Thank you. In that case, we'll go on to number 8, which is the external audit plan, Merseyside Pension Fund, pages 83 to 106. And Stuart Basnett from Grant Thornton will present this report and then invite questions and comments from members. Thanks, Stuart.
Thank you, Chair. For the benefit of new members, my name is Stuart Basnett. I'm the External Audit Manager for the Pension Fund, and my role is to plan and manage the day-to-day delivery of the external audit. I presented this plan to the Pensions Committee on the 22nd of June. I'm pleased to say that members didn't raise any concerns of our proposed approach. So Naomi has detailed the sort of overall approach to an audit, which is comparable for the Pension Fund as it is for the Council. So I'll just go through the main significant risks, which are detailed on page 90 of the agenda pack, which is page 3 of our report, titled Introductions and Headlines. So with regards to the significant risks, these should be familiar to committee members. All three of them were in keeping with the risks we identified last year, with the first one being management override of controls, which is a ISA 240, so Auditing Standard 240, non-rebuttable presumed risk of fraud inherent in all audits. And so that's why that risk has been included for our audit for 2021. So the key areas that this risk relates to are journals, any estimates made by management, and whether there are any transactions outside of the usual course of business. Secondly, we have the valuation of directly held property, and the valuation of property has been a key area of focus for all audits over the previous years, and it's an area where we are constantly increasing the level of testing and scrutiny that we apply, and this is in response to feedback from our regulator. So our plan procedures here involve engagement with the fund's property valuer and discussion and challenge with both them and management over the key assumptions applied. And as with last year, we have also engaged our own valuations expert in order to assist us in gaining assurance over the appropriateness of the valuation. As Naomi touched on in her report, there has been an amendment to the auditing standard ISA 540, accounting estimates, and this again increases the level of scrutiny which we will apply over the property valuation. The third significant risk we've identified is the valuation of level 3 investments. So these are the complex and hard to value investments. Their value is determined through what's known as unobservable inputs. So you can't easily go to the stock market and trace their value. They are an estimate made by management, and they're also sensitive to changes in key assumptions. The value is also circa 2 billion, so it is a sizable element of the balance sheet, and these items are mostly related to unquoted equities and pooled investment funds. In terms of materiality, so each year we determine the level above which that we deem misstatements or omissions could be reasonably expected to influence the decisions of users. So this year we have set our materiality level at 0.9% of net assets, which equates to 87.7 million. So the basis of 0.9% is a small reduction from the prior year level of 1%, and this is due to a sort of re-evaluation of all of the pension fund audits that we have, and 1% is the highest level you can apply. So we've reserved 1% for sort of the smaller, less risky, less complex audits of LGPS funds that we do. Since MPF, the Mes Pension Fund, is quite a large pension fund, it's got a high level of level 3 assets. It also has its own internally managed assets, which again increases the level of risk. So we felt it appropriate to reduce the materiality level percentage slightly down to 0.9%. However, members will recognise that in terms of the pound value of materiality, this is pretty much similar to the prior year, and this is due to the increase in the value of the net assets of the fund. Equally, our triviality level is the level above which we will report any amendments or misstatements to the committee, and this is set at 5% of materiality, which is 4.3 million. So in terms of logistics, we completed our interim audit visit remotely in March and April, and this gave us a good understanding of the controls and processes in place at the fund, and we intend to start our work on the final accounts this week, which is also remotely, with the aim to report findings at the September committee. In terms of signing our audit opinion, this largely depends on the timing of the signing of the council's audit opinion. We need to sign them off at the same time. However, we also perform work for other auditors, which is giving them assurance over the IS 19 assets at the fund. And so our target is to ensure that the majority of our work is complete by that September committee, so that we can issue our assurance letters to those other auditors. I'd finally just like to confirm our independence from both the pension fund and from the council. I'm happy to take any questions, Chair.
Any questions for Stuart? Are there any members of the pension committee here by chance? No? No? Okay. Anybody got any questions for Stuart? Seems not, Stuart. Sorry about that. So that was the External Audit Plan Merseyside Pension Fund by Stuart Basnett from Grant Thornton. And the recommendation is that the Audit and Risk Management Committee are recommended to note the report and consider the proposed audit plan and confirm that the arrangements set out will meet the committee's expectations with regard to providing independent scrutiny. Thank you for the report. It was quite a comprehensive one to read, Stuart, and I'm sure that's why you haven't got many questions, because it was easily understood by everybody. So thank you very much for that. Now, I have to apologise to everyone that I missed out agenda item 5 because I got a little bit mixed up with the change of the numbers that I had on my sheet. And so we're going to go back to agenda item 5, which is the internal audit update, school budgets and service level agreements, pages 21 to 44. And that will be presented by Mark Niblock. And then we'll invite questions and comments from members. So that's pages 21 to 44 in your documentation. Thank you, Mark.
Thank you, Chair. This is actually the Chief Internal Auditor's Annual Report for 2020-21. As the Chief Auditor for the Council, I am mandatorily required to prepare and present an annual report that summarises the work undertaken by the service and provides an opinion as to the effectiveness of the assurance provided by the overall control environment of the Council. The report that you have before you is presented in a style that's designed to comply with the requirements of the Public Sector Internal Audit Standards. It utilises a very comprehensive recommended template designed by them for this purpose. Now, the opinion identified in the report reflects all the work conducted by my team over the 2021 period. What has been a quite extraordinary year with unprecedented challenges being faced by the organisation. The opinion, therefore, has this year relied upon lots of different supporting information and evidence that would not be the case during a normal year. It includes an assessment and evaluation of the Council's response to the pandemic and the various governance and control operations that were implemented by officers during this period. My actual opinion is identified at section 1.3 of the report. It reflects actions taken in a year by management to fight the pandemic, address previously identified issues, and also deal with issues identified in audits conducted during the year. It acknowledges actions taken by senior management to implement governance and control arrangements in direct response to the pandemic and the various related activities and challenges faced. The opinion does acknowledge that some weaknesses in systems were identified during the year, and that where this happened, positive engagements had taken place with management to agree actions to address those items. These are all items that those of you that have been on the committee for over 12 months will be more than familiar with, because they will have all been reported to this committee and various actions taken in the year. A list of some of the key issues identified during the year is actually included at section 2.4 of the report, and some members may recall, as I say, having considered those items during the year. An evaluation of the actual opinions provided in pure audit reports is included at section 2.6 of my report. Significantly fewer audits were undertaken during the year due to the resources, as we mentioned earlier, being utilised across a range of COVID-related activities. So it's not been possible to make any sort of immediately, obviously direct comparisons with previous years regarding audit opinions. It is, though, however, pleasing to note that there are very few major opinioned audits identified, which is the highest category, risk category, that we could probably provide. A significant number of moderate opinions were, however, provided, although this probably reflects, again, the nature of the year that we faced and the increased COVID-related risks presented, as we discussed a little earlier. The majority of the risk opinions provided remain within the two lower risk categories, which arguably is encouraging as well. Now, attached to Appendix A to the report is a full breakdown of each and every audit assignment completed by ourselves during the year, and including all of those of a COVID nature, and providing opinions where appropriate. Section 3.1 of the report identifies and includes information relating to the performance of my internal audit team, and includes outcomes in relation to key performance indicators. These all indicate that at the year end all the targets were achieved, which I'm pleased about. At section 3.2, identify how the internal audit service complies with the requirements of the CIPA code and the public sector internal audit standards. We've already touched upon how difficult it was over the last 12 months to ensure total comprehensive compliance, but we certainly feel that we've done enough to ensure that we have reached a significant and sufficient level of compliance with those standards alongside all of my counterparts, as I say, up and down the country. Just as a sort of as an aside to that, really, we are required, as part of the public sector internal audit standards, to ensure that we have a external assessment of the work of the internal audit team undertaken within any given 5-year period. Our last external assessment was undertaken back end of 2019 and into 2020, where we were identified as being fully compliant with all of those quite exacting standards. I identify at section 3.4 some of the challenges that the service faces going forward, and how we will intend to sort of pick up on some of those areas that perhaps have been a little later during the previous 12 months than we would previously have done and would like. I also identify some of the associated development opportunities there. Members are all asked to note the report, but again, I'm very happy to take any questions that you may or may not have.
Thank you, Mark. Does anybody have any questions? Thanks, Jenny.
Thank you, Chair. Section 2.5, you talk about the summary of the key risks arising in the year, and one of those is financial management. I'm just aware that at the moment you're upgrading your accounting systems, and I know your financial director's head of finance is talking about data cleansing. I'm wondering what you're doing to mitigate against that risk, both from an internal and an external audit perspective, so that you still have access and availability to any data that has been cleansed. Thank you.
Thank you, Councillor. You are quite correct in that it is a significant risk that's presented. The timing probably couldn't be any more challenging than it actually is. From an audit perspective, I have a member of my team working on the group, the project group that's been put together to oversee the development of and subsequent implementation of that particular ERP project. So I've got direct involvement with and access to kind of, steering what controls should be in place, what actions are being taken by management at different levels. We're contributing to and challenging all the way, which from my perspective is an excellent sort of opportunity and one that to some degree mitigates some of those significant risks that we've talked about. You're quite right in relation to the data transfers and the associated risks that will be presented at that point. It's my intention for this person that works for me to remain involved with throughout that process, and we can sort of maintain that regular ongoing dialogue and input to what is and isn't being done, ensuring that the relevant sort of controls are in place, that the relevant kind of access levels are maintained in the correct fashion, that the data cleanse exercise is undertaken in the correct fashion. So, and again, it's something that I will regularly be bringing updates back to this committee in relation to, so I will be able to keep you all informed as to sort of what progress is being made and where there are potential issues that are being thrown up, kind of thing, and what we're doing to address them. So hopefully that will give you some of those assurances on a regular, ongoing basis. It is a quite tight time scale. Things will happen very quickly over the next sort of 6-8 months. So I think it's as well for you to have oversight and insight into kind of what is happening there.
Thank you, Mark. I think I would ask assurances as well that the actual original data is retained and that is going to be accessible, so as a parallel run system, if you like, so the external auditors can review what has happened in relation to data cleansing, and you're not reliant on just 1 or 2 members of staff internally to do that, because as you're rightly saying, that's a huge undertaking for a small number of people in your team. And just another area of specific audit I would request, please, is one project, so the Sail project, the cafe at West Kirby on Marine Lake. I want a report on that as to how much that is over budget, if indeed it is, both from a building standpoint, but also the proper income and expenditure accounts going forwards that are expected from that particular project, because that's an area that I have of particular concern currently, which is just one specific area. So if I may please, if I can ask Chair for that report to be brought to us, that would be really helpful. Thank you.
Does anybody else have a question for Mark? No? Okay. Report, and so the Audit and Risk Committee is recommended to note the report. So I'm sorry, going to jump a little bit more now, because we're now going on to agenda item 9, annual governance statement, pages 107 to 140, and Ian Miles, who's our audit manager, will present the report and invite questions and comments from members. Thanks, Ian.
Okay. As you'll be aware, the Council has a responsibility to conduct an annual review of the effectiveness of its governance framework, including the system of internal control. Now, paragraph 3.3 of the covering report summarises what were the key elements of that review. And the outcome of that annual review is reported through the annual governance statement. Just a word on the timing. In paragraph 3.4 of the covering report, it just mentions that the annual governance statement covers the period from the 1st of April 20 to the 31st of March 2021, and therefore any significant governance issues identified at that time. But it just makes the point as well that it's also required to take into account any significant issues up to the date that the accounts are signed, and hence a final version of this annual governance statement will be reported to this committee along with the final version of the Council's statement of accounts. Just make a couple of comments about the content and the structure of the annual governance statement. Firstly, a comment in terms of what it doesn't include. Clearly, many of the key governance processes remain in place. These are summarised in the Council's Code of Corporate Governance. Some of these have been referred to in previous statements. So the annual governance statement isn't trying to summarise all of these governance arrangements. What it does do is it's focusing on the key changes and developments within the Council's governance framework during 2020 and 21. Now, in the appendix to the report, you've got an executive summary on slide 2, page 112 of your agenda. There's an introductory section on pages 114 to 117 of the agenda, and then there's 3 main sections that follow, and they're summarised in paragraph 3.5 of your covering report. So from page 118 to 130 of your agenda, what it's doing there is it's taking for each of the 7 principles of the SIPFA SOLAS framework for good governance, it's taking each of them in turn. It's highlighting the key aspects of the Council's governance framework that have been strengthened in the year, but it's also highlighting areas where it's recognised that there's more that can be done. There's further areas where those governance arrangements can be strengthened more. On pages 131 to 135, there's a summary of the significant action that's been taken during 2020-21 in respect of the 4 significant governance issues that were identified in last year's annual governance statement. And then finally, on pages 137 to 140 of your agenda, there's a summary of the actions that are planned in 2021-22 to address the 3 significant governance issues that have been identified from this year's annual governance review. And just finally, I'd just like to highlight a couple of sections or paragraphs on slide 2 on page 112 of the agenda. That's the executive summary. In paragraph 3, it just highlights how the response to the COVID pandemic has been reflected in the annual governance statement. So within each principle, where relevant, the governance statement provides an overview of how the Council has responded to the COVID-19 pandemic, and as a result, the significant adaptations, changes that were necessary to the governance arrangements in the year. So that's deliberately reflected in each of the principles as applicable. So, for example, the strong leadership, the emergency planning arrangements, the close working with partners, the significant redeployment of staff, they're all flagged in the relevant principle. In column 2 of that summary, it just summarises there the 3 significant governance issues that have come out of this year's review. So you won't be surprised to hear that's a continuation of financial resilience and management, regeneration and compliance, which reflects really the 3 significant governance issues that the Council continues to face. The actions planned in respect of those are highlighted in the annual governance statement. And then finally, the final paragraph in that executive summary, just a conclusion really that based on the annual governance review undertaken, the conclusion is that the Council's governance arrangements overall are effective in delivering against the 7 principles of good governance and supporting the delivery of sustainable outcomes. So in the recommendations, you're asked to note and approve the governance statement and to delegate for the Chief Executive and the Council Leader to sign the draft statement prior to publication, which is required at the end of this month. But I'm happy to take any observations, any questions on that report.
Are there any questions for Ian on this report at all? No, I've just got a couple, Ian. Very comprehensive report. And I think throughout the meeting this evening, those of us that have spoken have highlighted the most important areas of financial resilience and management, regeneration and compliance. I mean, Jenny's touched on financial resilience and Councillor Brennan has touched on the compliance issues. And if you go through the report, certainly on risk management on page 116, you've got a review of the risk registers for corporate operations and project risks, corporate risk reviewed by the senior leadership team and audit and risk management committee. Mark and I have had quite a number of meetings discussing going forward the sort of reports that were brought to the audit and risk committee, especially as 21-22 is going to be an extremely challenging year, in that if we don't get our budgets in line, if we don't have revenue streams coming on board, particularly from 23-24, even if we have the capitalisation directive for 2021 and 21-22, that the failure to deliver on our business plans will mean that we will be in serious trouble. And so I think this year for this committee it's going to be particularly onerous on us to make sure that people's feet are held to the fire, that all the reports that we require to satisfy ourselves that the outcomes that we need to secure a future for Wirral Borough Council, that we meet our objectives. Certainly the regeneration of Birkenhead is going to be a major factor in ensuring that we've got additional revenue streams coming in from 23-24. And as I'm sure when Keith Patterson does his report on procurement, he will emphasise to us that basically departments staying within budget is absolutely essential. So it's really a two-pronged attack going forward, that we keep our costs down, that everything is monitored carefully, and that we achieve additional revenue streams going forward. So I'd like to thank all of those so far that have given us the information. It's a very comprehensive report from Ian and from the others like Mark and Stuart this evening. And so if nobody's got anything else that they want to say in relation to that annual governance statement. Sorry? Oh, I beg your pardon, yes. Do you want to go ahead?
Thanks, Chair. No need to apologise. I was a bit tardy putting my hand up. I just want to raise the same issue as I raised earlier, which was about the mitigation of risk and the link to our governance processes. And I think in that item, we had a commitment that we would look to strengthen the process whereby council committees had effective oversight over the mitigation of risk. I think that's what we agreed in that item. And I would just like to request that in the report, notably in pages 128 to 129, which is headlined Managing Risk and Performance Through Robust Internal Control and Strong Public Financial Management. Areas where it is recognised governance arrangements can be further strengthened include that a line is included which reflects our earlier discussion. Thank you.
Anybody else got any questions for Ian? No? The recommendation is that the Audit and Risk Management Committee are recommended to note and approve, subject to comment as appropriate, the draft annual governance statement, including the actions planned in 21-22, to address the 3 significant governance issues identified from this year's annual governance review, and to delegate the Chief Executive and Council Leader to sign the draft statement prior to publication by the 31st of July 2021. So is that all agreed? Agreed? Thank you. Okay, so agenda item 10 now is procurement update, pages 141 to 156, and Keith Patterson, our Senior Management for Procurement, will give the report. Thanks, Keith.
Thank you, Chair. Good evening, members and colleagues. Before I lead into the report, the Director of Resources, Chair Hale, has asked me to provide a brief to the committee, and it reads as follows. By the way of introduction, I wanted to update the committee on the significant progress undertaken to ensure compliance and reduce the number of exception requests and retrospective purchase orders. In terms of governance, all data is now provided to each director on their stats on a monthly basis. Each director is requested to take action and ensure compliance throughout their areas. There have been much communication with directors and director management teams as to how we can work together to ensure compliance, and the figures in the report show that this is much improved. The data is now reported and challenged at several senior officer meetings. Operational Performance Group, OPG, are looking at overall organisational performance. Corporate Governance Group, items escalated from OPG where there is a compliance issue. Chief Executive / Section 151 Officer bi-monthly meetings to hold directors accountable for the Directorate's performance and compliance. From the next ARMC meeting, an update will be provided from the Corporate Governance Group on a 6-monthly basis that will inform the committee of all areas of non-compliance across the council. A new post has just been appointed within finance, which will, amongst other things, be responsible for ensuring organisational compliance, and this appointee will start with the council in the autumn. So I hope the committee are able to gain assurance that there is significant work ongoing to improve overall organisational compliance following the increased work being undertaken. So if I could just go into the report now, Chair. This report is submitted to Audit and Risk Management Committee on a 6-monthly cycle, and as a procurement update provides details of 2 key themes: contracts information and no PO, no pay progress. Contracts information. So 30 exception requests were granted this period. This is consistent with previous reports, as 61 requests were granted in the previous 12-month period. 22 extensions were granted compared to 4 during the previous 12-month period. All extensions granted have to have a break clause in the original contract term. So, for example, it may have 2+2 or 4+3, so that we don't just automatically extend a contract without having a clause within it. The second phase of any contract, of a contract extension, has to be based on a satisfactory delivery of the first phase of the contract. Therefore, these are not continuations of contracts to avoid procurement processes. 39 variations were received in this period compared to 33 in the previous 12-month period. Contract variations apply to increases in the value of contracts where the increase is 10% or more for contracts below 100k or 5% for contracts of 100k and above. 7 contracts awards of 500k or more were made in this period. There are some general points I'd like to make about the approval process for contracts in this report. Since September last year, we have applied a new system for the approval of all requests. It's an electronic methodology and workflow, and we call it the Procurement Smart Form. The new Smart Form now links budgets to contracts. Previously, we did not have this capability. There are multiple stages to the approval of exceptions, variations, and extensions. The first stage is that these forms go to finance. That is the first step. And finance approve the budgets. The second stage is that it then goes to the budget holder. The third stage, it goes to the head of service. And the final stage, it will go to procurement or legal as well, if this is an exception. This is a rigorous and robust approvals process which provides highly effective controls and audit trails. On to no PO, no pay. The report focuses on transactions which have been processed by a variety of methods with specific reference to retrospective purchase orders and freestanding invoices. The analysis compares the latest 6-monthly period, October to March, with the equivalent period in the previous financial year. Retrospective purchase orders. The report shows a reduction of 33% by volume and 26% by value. This indicates that the measures that we have applied to reducing these transactions are taking effect. There is more work to do, and we are supporting departments to achieve this. 80% of all orders processed are now compliant with the no PO, no pay policy, and this compares to 65% 18 months ago. The report indicates that RPOs are more of a problem in some services than others, and I have been personally working with these services through DMTs and SMTs to establish improved practices going forward. The Corporate Governance Group has also been engaged, and analysis is provided to the group on a monthly basis. Freestanding invoices. These transactions have reduced by approximately 50% by volume and 65% by value since the last report. Freestanding invoices are those invoices which are processed without a purchase order. They represent currently about 0.02% of all transactions. These further reductions reflect the impact of the measures taken to address these transactions. When I reported to this committee in November 2019, the volume of freestanding invoices was in the region of 9,000, so we've made significant progress on this front. Of the remaining 825 invoices in the report, we know what these invoices are, and we are still working with the services to reduce these even further. That concludes my report.
Thank you, Keith. Has anybody got any questions for Keith on this report? Thanks, Stuart.
Okay, thanks, Chair. Thanks, Keith, for the report. I noticed a few of the contract renewals are with like Civica and Capita for IT systems that only they've got the keys to. To me, that sounds a bit like license to print money. I know when you're looking at proprietary systems, then we're obviously, we're tied in there and we don't have much choice. I'm just wondering, are we able to make use of open source systems? Do we maximise use of open source systems when we're ordering IT projects?
Yeah, through the chair, yeah, we're conscious about the contracts to do with Capita and Civica, and there's one or two other corporate applications as well. In fact, this has been the subject of some discussion with the Investment and Change Board last week. So we're mindful that we seem to be embedded with these application types, and we need to do something about it. So I just want to reassure the member that this is actually a high priority at the moment, and we're looking at it.
Does anybody else? Oh, yeah, okay, Stuart first and then Jenny.
Thanks, Chair. I was just looking at Appendix 2, the contract exemption spreadsheet, and in particular record numbers 15 through to 20, which all seem to be highway related work, asphalt, micro asphalt, surface dressing, etc. And it's suggested in the spreadsheet that waiver of the rules would be in the interest of the council, be lawful, etc., and value for money. And there's a number of different contractors involved for not insignificant amounts of money. The lowest being 900,000, the highest being £2 million pounds. What is the waiver? Have we not tendered for any of that work? Are we just appointing a particular contractor?
Yes, I can respond to that. So these particular contracts were originally tendered, and they were due for renewal. We were informed by the commissioning service that they were unable to complete the renewals on time due to capacity issues in the team. Of course, from a procurement function, we are heavily reliant on the commissioning services to get this work done. So what we agreed to do was put in a provisional period by which we could get the tenders underway, and the minimum period that we could agree to, I think, was either 6 months, and that was why we put these contracts in place, so that we could get us through that particular period. So I understand the question, and basically the response is that the service did not have the capacity to renew the contracts on time.
Okay, yeah, I follow that entirely in terms of the ones obviously I've highlighted, and I don't want to work my way through all of the various exceptions to try and discover why we've waived the rules. I mean, some of them are possibly clear, but I know it's a very small spreadsheet, which when viewed at just 100%, it's just a massive. Yeah. I need bottles, but it might be worth a column in the spreadsheet, to advise why it why it was necessary to exempt these particular items from the procedure rules. And it might be, I mean, it's on the face of it a reasonable request to say we didn't start the process in time. But if they had started it in time, we might have been able to resurface a few more roads, because there might have been competition. Who knows? I mean, these are strange times as it is. But I think we do need to. I think we need to see just a little bit more information as to why the rules were disapplied for these particular cases. Going forward, I mean, it's the first time I think we've had a report of this sort of detail. So clearly there might be other detail that members would want. Does that make sense, Chair? Just as a suggestion. Sorry, I was going to ask. I was going to ask also about the extensions, but I think I heard you say that we only ever extend where the break clause was already in place, and I'm relieved to hear that. I don't think that always used to be the case. Very often we responded to requests from contractors who would say, we'll give you another year if and rather than go through the fuss. Very often we'd just do that, but I'm relieved that we don't. In terms of the awards of contracts, similar point I think that was made on risk. Do the programme committees now have oversight of the contracts that fall within their directorates? Certainly they used to the last time we were a committee-based authority, but clearly that would have moved to executive members and cabinet members sign-off. The reason I ask is, very often when contracts are being put together, criteria are assembled So we will award the contract based on 40% price, 20% this, 5% the other, 5%, you know, health and safety. You've got a health and safety policy. And they'd have to produce this information that would be scored. Now, I know the executive, the leadership in particular, is very keen on the Wirral pound, if you like, how much of the money we can keep within Wirral, within the city region, within the northwest and what have you. So it's about, do we have a standard methodology that supports the corporate priority in that sense? You know, value for money is one element, local employment is another, you know, and local suppliers are another. Do we have an overarching corporate policy on how we score contracts for award? And do we report them into the programme committees for the particular contracts that are to be awarded? So that would be a question probably worth.
Okay, Chair, I think there were actually multiple questions in one question, so I'll try and address them. So in terms of having a standard evaluation methodology, yes, we do. So we have a 70% price, 30% quality, and a 15. Well, let me get my numbers right. We've got a 65% price, a 15% social value, and the rest is on quality assessment. Of course, that can vary from one contract to another, so commissioners can make a request to have that adjusted, but that is our standard methodology. In terms of the approval of contracts, for contracts above 500k and above, they are actually submitted to committee for approval, the awards are. So before we make that award, they go through that committee stage for approval. I hope that covers the question.
Yes, thanks. Yeah.
Thank you, Chair, and thank you for your report. On the retrospective purchase orders 4.3, you've got 11.9 million value of retrospective purchase orders, and you've got 5 million still this year of non-purchase order freestanding invoices. They surely remain a concern, and surely they make us worried, if you like, about the lack of accountability. So can you tell us what is being put in place to stop this from happening completely, so next year we see zero, and what areas and what services and what management in particular are really producing the worst, if you like, cases in these two particular areas? Thank you.
Yes, I can answer both of those. So the high value of the retrospective orders is largely to do with contracts that we have in place for highway services. So there is a tendency for highway services to use invoices to generate the purchase orders as part of their validation process for work being completed. Well, we have said to them that that is not the right way to go about this, and we've been trying to work with them so that we could actually create the purchase orders in advance and call off those purchase orders right down from the contract itself. So despite the fact that those high values look frightening, we do know that they are not just random purchases based on just random retrospective orders. They are allocated as part of a contract. So, but we are working with that service to redefine the way in which they create those transactions and manage them. The freestanding invoices, again, they seem to reflect a high value of 5 million, as the member points out. But we know as well that these transactions largely belong to the PFI contract at the moment, which is Wirral Schools Company, I think it's called. And we've been working with that service as well, again, to ensure that they generate the purchase orders in advance instead of waiting for the invoices. Instead of just paying the invoice. So we're working with them to do that, so we know where those belong. We also know that in those invoices, some of those transactions are for utility payments and relate to some of the utility payments for schools. So schools are not able to raise purchase orders through our system, but we do manage the transactions on their behalf. But again, we have managed to find some solutions around that to prevent that. So I feel in answer to the member's question, that both of those areas will actually reflect an improvement at the next report.
Thank you, Chair. Just a supplementary on that. Could I ask at the next committee meeting then that you bring far more detail and breakdown so we can actually see which areas they're falling into, please, and also therefore for us to understand what this relates to, because certainly you've got there 2,161 RPOs, for instance. If 2,000 of those are relating to highways and they're ongoing, that's a very different scenario, but it would be good to have a much deeper dive, if you like, into that data if possible, please. Yeah.
Yeah, I'm certainly not suggesting that all 2,100 orders are to do with highways. I'm suggesting that they represent some of the higher volumes. What we do know as well, though, that some of the higher volumes exist within the services. So the report does show where those, where the guilty services are, and we know that, for example, that the neighbourhoods is sort of top of the table. And I am attending DMTs almost every couple of weeks for neighbourhoods to try and address this problem. And we know that a lot of those invoices and a lot of those RPOs exist in the parks and gardens side of things. So we do have that analysis, and I can provide a spreadsheet that indicates all these invoices if that's what the member would like. But that's a lot of data.
If I could, in addition to the measures that Keith's kind of outlined and the steps that they're taking to try and reduce these sort of numbers, I just wanted to sort of refer back to the role and work of the corporate governance group and the operational performance groups that are taking a much more robust approach to where these kind of instances are materialising from, and a falling, dare I say, inviting kind of directors along to these sort of corporate governance group meetings to question them very specifically about sort of why there is a significant number emanating from within their department. Does it suggest that there's a lack of efficiencies in terms of some of the forward planning that then enables them to be on the back foot when it comes to kind of renewing? So that particular group, the corporate governance group, which I refer to, is chaired by the Director of Resources. I sit on that group along with a number of other senior managers from across the organisation, and as I mentioned, are adopting a much more robust approach linked to the work that Keith and his team are doing, and getting around the sort of the DMTs. We're extremely hopeful that will bring down the numbers and will result in some better viewing as we move forward. Thank you.
Keith, if I could just some questions again, because I think it was me that brought it up initially, wasn't it, at audit and risk, that there were an awful lot of no PO, no pay, and invoices being paid with no sort of audit trail or track. But there are a couple of items that I wanted to bring up. I'm sorry, I brought this magnifying glass because some of it I just can't read. But on the Appendix 1 contract award, where there's 7 of them, on one of them, it's got that the original budget or the contract budget was 2 million, and the narrative, the contract description, this the second paragraph sort of perturbed me a little bit, because it says estimated indicative annual value of approximately 400,000, which is right over the 5 years from 2021 to 26. Because the contract was 2 million, so that's 400,000 over 5 years. It says, however, the employer does not undertake to bind himself to procure any particular value of service per annum or within the term of the contract. And I just thought that was a quite unusual wording, really. I thought it was a bit lax insofar as it's kind of letting them off the hook, isn't it? So they don't really have to procure any particular value or service per annum or within the term of the contract. Do we do many like that?
Chair, is this in the contract award section, or is it in the...
Yeah, on your, where we've got the contract extension, we had chatted at a previous Audit and Risk Committee about having a narrative that's easily understandable. So, for instance, on the Appendix 3 contract extension, I would have thought that we'd have shown start date, original end date, amended end date, original budget, and amended budget, and reason, so that when we look at the figures, we can put them into some context.
So we're talking, sorry Chair, so we talked about the contract extension
Yeah,
table. Okay.
that was contract extension, yeah. Because it just says contract title, start date, end date, the contract design, supplier, contract budget, and budget source. But you see, if you look at the start date and the end date, so for one, it's 2017 to 2022, which is 5 years, and you've got the contract budget, but it's not clear if this is the extension budget or what the original budget was in the original term. So I can't read from that, the contract extension, whether or not the 2017 ended at some point between March 2022, and we've extended it to 2022, but for how long have we extended it? And is that budget, which is, 20,671,000, what was the original budget and term, just so that we can get the figures into some context, because it's unclear what the actual extension is and for how much. So, for instance, if it was extended by 2 years, and if you knew what the original budget was in the original term, you could work out on the extension budget and term if you were getting value for money, or the extension was a lot higher than the original amount. Do you see what I mean? So we can put all these figures into some kind of context. So just so that we can, if it had the start date and original end date, then the amended end date and the original budget and the amended budget, so you can sort of cross-reference the figures over how many years it's over. And just on another one as well, you've got a start date of November 2020, end date of July 21, which is about eight months, isn't it? The contract is to be extended by a further 12 months, but I don't know whether or not the further 12 months is it within, whether that's from before 2020 to 2021. And we've got the contract budget of 60,000, but that doesn't relate to whether that's the extension or the original. Do you see what I mean? I'm just trying to get my head around some of the figures, really.
Yeah, we've actually worked quite hard to change the look of these tables, and we tried to improve them, but I do take your point where I think...
And on Appendix 4, contract variation, there's one where it's a 5-month contract, August 2020 to January 21. It's a 5-month contract, and the original budget was 572,000, and the budget adjustment is 500,000, and the new budget is just over $1 million. So it's basically doubled.
Yes.
And that seems an awful...
that's correct.
That seems a lot, doesn't it?
Yeah.
Now, has it doubled because... Well, why is it doubled is one question. But also, when the original budget or contract was set in August 2020, and it was set at 572,000, why 5 months later is there an adjustment of another 500,000? And there's no real narrative to explain why. But if you were negotiating a contract for 5 months, for it to double 5 months later, there's something wrong either at the outset, or we've just decided to give them some more money.
Yeah. So.
And not knowing what extra work's being done for it.
I think that is it's called the just checking contract, which is when I looked at it, I thought, is that a misprint? But that's actually a contract.
No, it's not. It's a different one, actually. I don't want to say on camera which one it is.
Yeah. Okay.
I'll tell you which one it is, though, for your reference. It's record number 60.
Yeah. So I think in response is that, as I indicated right at the beginning of this report, there's quite a rigorous approval process for variations. And before they even reach procurement, they go through several stages of improvement, both approving both within finance and then back in the department. So by the time they get back to us, these have been approved by three different stages. As far as we're concerned, when they get to us, then if finance are confirmed that the budget's available, the budget holder has confirmed that it's accepted by them to make that payment from that budget.
Yeah.
And head of service has confirmed that they want the contract to operate with that improved budget. Our role in that is to ensure that it's compliant, so that we look at the contract's procedurals and make sure that these variances are in keeping with the contract's procedurals, and where they might be part of the thresholds for public contract regulations, we ensure that those thresholds are in place as well.
Yeah.
So I can't directly answer the question as to why they spent that much more on that particular contract.
Because on the variations, the total amount of contract variation, because they never come with under budget, do they? They're always, it's always more money. And the total contract variation, or overspend as I would call it, is just under 6 million. And if you break it down, it's between grant income, capital reserves, revenue. And revenue, of course, is particularly important because if we've all set budgets and the budgets are X, and then partway through the year, out of revenue, we spent another 1.5 million. We're kind of veering off course, aren't we? And going back to our original conversation about revenue streams and keeping within budgets, this area is particularly important. Now, on some of them where it's got capital and grant 750,000, but there isn't a split between what's capital and what's grant. And for instance, if it's grant and it goes over budget, does somebody give us that extra money if it's grant?
So in terms of the way it's broken down in terms of the different budget processes, we started to put that in because we actually asked for that to be included in the new procurement smart form, so we're able to break it down into that form. I agree that actually we've seen a higher proportion of variations in this 6-month period than we've seen before. Is that partly because we've actually got the ability to record it, whereas previously I think that variations and extensions in contract were actually overlapping. I think part of this is because we've got more clarity. But as far as the grants are concerned, if they're able to submit a variance based on a grant, does that mean that they've had more grants? And they can therefore vary the extent of finance they put towards that particular service.
Because I mean that sort of it's 5,942,000 odd. That money has to come from somewhere, doesn't it? Some of it will be grant, some of it will be revenue, and some of it is capital, and some of it is reserves. Actually, 203,000. But certainly, I mean, for instance, capital 40. Well, it was 40,000, that wasn't too much. But from revenue, 1.5 million is a lot, I think.
Yeah, I agree.
Do you want to speak on that? Yes. I just want to make sure when we're looking at two specific areas of revenue and budgetary control, that these things don't slip through. I mean, I think you've been doing a great job, Keith, from 2019 when all this was first identified, and it has come on a long way, but I mean, I'm sure you're the first one to agree that everybody else needs to make sure that they kind of up their game and that there's some control sort of further down the food chain, that people are accountable for, it's not monopoly money, it's council taxpayers' money, and you can't just spend it willy-nilly. But I want to put on record that I think you've done a great job, Keith. And I know you think like me that we want to tighten up as much as possible and that everybody's accountable and nothing slips through the net so that we don't get to the end of the financial year and think, oops, where's the money gone? Because a lot of this is going when it shouldn't be. And if we've got tighter controls, we can alleviate that bit. But thanks for that, Keith. Does anybody else want to have a question? Simon?
Sorry, I think you said in one of your answers that once the contract is set, if the head of service decides he wants to run with that overspend, that's agreed, and you just then have to make sure that that further extension is compliant. That seems a little strange when we've got overspends of £500,000 on an agreed contract that the head of service is just agreeing. I see that as people can get in trouble that way.
So that's actually two different issues. So there's a clear difference between a variation and an extension of a contract. The extension is actually a change in the contract date from a start date to an end date. So if there is provision within that contract term to extend that contract, say from 12 months to 2 years, then it has to have that provision in there for the second year. Only the additional cost of that year, which should be the same cost as the first year, because we put that break clause in the contract. So in other words, if it's a contract of £50 and we've got a break clause in after a year, so it's £25 in the first year, it would be £25 in the second year to make that adjustment, that contract term. In terms of variations, that's different. So a variation is the same contract term. So it might be between the 1st of April to the 31st of March, but it means actually we're spending a little bit more on what that service was originally designed for. So it's basically saying instead of spending, £50 on eggs, we're going to spend £100 on eggs, even in the same period.
Really, isn't it? Why are we spending the extra? If you're getting twice as much, or you need extra and you've agreed it, because I gave the analogy that, if I was ordering a pair of curtains and we agreed it was going to cost me £500 and he has the spec, and then he comes and puts my curtains up, or she, and says, it's £1,000 now, and I go, oh, hang on a second, no, it's not, it's 500, that's what we agreed. And so a variation would be, he would say to me, well, you decided you didn't want cotton, you wanted silk, and you wanted triple pleat instead of double pleat, and instead of being to window ledge, you wanted them down to the bottom. And I go, yeah, you're right, so that's going to cost more, and I can see why, because I've varied it, and we've both agreed then that the contract has changed. It's not the 500, but it's the 1,000. But the sort of a similar scenario using curtains is, we had a contract for £500 or whatever. It comes in at 1,000 and it's no different, or it's what I expected, or it's taken longer. Well, that's not my problem, because you said you'd do it in 2 weeks. So if you do it in a month, you've lost out there, not me, because we didn't agree it was going to take a month. We agreed 2 weeks and it was going to cost this, and they were the materials. So it's looking, maybe it's people having a different mindset when they're negotiating the contracts, that it's not like, oh, we need to look another 500,000, okay, let me sign that for you. Do you know what I mean? That it's questioned and argued, and unless there is a valid reason, that the answer is no. I'm just wondering if people are being too lackadaisical in agreeing prices and costs when they ought to be a bit more hard-nosed about it, really.
Yeah, I'll just make 2 points on that, Chair. So firstly, if someone decides to vary a contract, I spoke before, if it's just more eggs, but then more eggs is one thing. What it doesn't mean is that you can vary the contract so that you can buy more eggs and a bit of bacon and a bit of sausage. It means that you stick into exactly the same requirements of the contract. You can't change the material contents of the contract. I think the second point is this kind of leads towards another part of what we're doing to improve the situation. Quite recently, we've started to undertake a commissioning and contracting review, which has been supported by SIPFA. This was commissioned by Cher herself, because we think that part of the problem with our contracts is that we don't spend enough time at the front end, at the pre-procurement stage, in preparing for contracts. So as a consequence, we tend to recycle what we have now rather than redefine and redesign what we need from contracts. And if we do that, then the kind of situation that you described, Chair, would actually be avoided because we've actually put things in right at the beginning of the contract to avoid that situation. Hope that makes sense.
Thank you, Chair. I mean, what you've just said there is quite horrific. That's basic project management, isn't it? To get everything in advance, to get all the ducks in a line, if you like, and to make sure that there's proper financial management in place and there's accountability and that all the leaders and the senior team are very aware of that. I think there's far too much reliance here on what people at various senior levels want to do with a contract for variations as opposed to the council staying within budget. And I think this year more than ever, this committee, we've got our job is to make sure that we keep you within budget. Otherwise, the council is at risk financially. So more than ever, these conversations are of absolute importance. And I'd ask you, perhaps, Chair, to take that up with the Chief Executive himself. I think this needs to go right to the top to ensure that we get far better accountability built in and indeed far better project management and planning and accountability of costs. Thank you.
Does anybody else have any more questions for Keith? No? Keith, thank you very much for your report. And I know they're going to get better and better each time and the figures are going to go down and down more. And say thanks again for all the commitment and work that you put into producing the report. So our next item...
Chair, just before you move on, I was just wondering how you're going to capture what's been said, really, and the general improvements.
Well, through the minutes for a start.
The minutes will be one way. That puts a lot of pressure on Mr. Hughes.
Keith and I have had conversations around this, and I have with Mark. So we sort of crawled all over it, and I think you'd agree, wouldn't you, Mark, that it is making an improvement, but probably the speed of the improvement has to, or the pace has to improve in terms of speed to get this done. But this has been an ongoing issue. This is probably 2 years now, is it? Keith, yeah, 18 months.
Yeah, I mean, it's clear that the information is improving, and that's what Mr. Parsons done. Clearly, there's other bits of information we thought that might be useful, but at some stage we might actually have to have budget holders in to explain why they've managed to double the cost of because there needs to be not so much a consequence, is it? But people have got to start explaining why these things are happening, and because it's not the responsibility of necessarily the officer's oversight. They can only bring the information to us. You know, I'm sure every director head would come here and say, well, I need silk curtains. Of course I do, every office. I'm not sitting here. I'm sure they could, but at some point somebody, and it might have to be members, say, I'm sorry, you're just going to have to put up with cloth, for the certainly for the duration, because I think when you've added this up, Chair, we're sitting here thinking, what budget crisis? Just stop overspending your contracts, and then we won't have a budget crisis, will we? And it always strikes me as simple as that, and I'm sure it isn't from the directorate's point of view. But they're going to have to explain themselves. We can't just say, oh, another 500,000 that was. Oh well, it's not enough for that, and that needs to be captured in the minutes and maybe in spokespersons' catch-up meetings in due course, so that we know what we need and we know what we're going to do in terms of holding people to account for massive overspends.
Keith, I mean, obviously we can invite you. Well, you come on the monthly meetings that I have with Mark and with the leaders, and so certainly I'd like you to bring going forward the information that you've got, because you know where overspends are, and at some point if you want us to bring budgetary managers into audit and risk and have a chat.
I just add one last kind of point on that. You talked about that challenge, like, and the challenge that you want to provide. Like, there are a series of meetings that are now going to take place on a regular basis between the Director of Resources, the Chief Executive, and individual directors, specifically in relation to the budgetary kind of compliance, shall we say, like, so there's happening at that kind of senior officer level, like, and that kind of thing, and I suppose, you know, the escalation from that could potentially very well be here, couldn't it? But it was just to give you that kind of assurance.
Okay, does anybody else have a question for Keith at all? No, well, the recommendation is then that that the Audit and Risk Management Committee are recommended to note the report, in addition to, in the future, Keith bringing items to the leaders on the monthly sessions that we have with Mark Niblock to escalate any areas that you think are pertinent to staying within budgetary control, and bringing in officers that you think might like to delve further into their budgetary responsibility. Okay, thanks very much, Keith. On to agenda item number 11. I'm sorry, did we all agree to that recommendation? Yes, thank you very much. So number 11, regulation. Sorry, Stuart.
Just a bit of concern about bringing employees in, or officers in to be grilled. What sort of level are we talking about? Are we talking about, you know, directors, or we talking, because it's not our role to be managing staff?
Well, no, it would be directors, but they'll get the information from further down the line, wouldn't they? And they can bring it then to this committee. So it wouldn't be individual members of staff, it would be the directors of those particular budgetary responsibility.
Because I do seem to remember the previous chair was very keen to bring in the individual members of staff to be named and shamed, which I think is not responsible, so I think it's totally out of order.
No, I wasn't suggesting that we name or shame anybody, but that we just ensure that Wilborough Council functions within its budgetary and governance responsibilities. So no, it wouldn't be naming and shaming, Stu, but just making sure that those items that need to be addressed at this committee, that the correct person's brought to the committee to report on it. Regulation and Investigatory Powers Act 2000, pages 141 to 156, and Colin Hughes, senior lawyer, to represent the reporter, will then invite questions and comments from members and remind members that a revised report has been published and circulated. Thank you.
Okay. Yes, so this report, Chair, informs the committee of the outcome of an inspection on the 21st of May by one of the inspectors of the Investigatory Powers Commissioners. He was looking into the Council's use of its powers under the Regulation of Investigatory Powers Act to use covert surveillance in order to detect criminal offences. His report is in Appendix 2, and I have summarised the inspector's findings in Section 4 of the report to the committee. He was satisfied with the arrangements for training officers. The training takes place annually by an organisation which is expert in this field. Since December 2018, 3 authorisations for covert surveillance had been granted by the Council's authorising officers and approved by a magistrate. 2 were to detect suspected underage sales by retailers of tobacco, and 1 to detect suspected fly tipping. The inspector noted some gaps in one of the authorisations for underage sales, but was particularly impressed by the quality of the authorisation in relation to suspected fly tipping. The inspector was satisfied that proper guidance had been given on the monitoring of open source internet and social networking sites by social workers to protect the welfare of children. Monitoring of sites that is repeated and systematically targeted on individuals would require authorisation by an authorising officer and approved by a magistrate if intended to detect or prevent suspected serious offences against a child. Finally, the Investigatory Powers Commissioner had written to all authorities in September 2020 expressing concerns about the security and retention of personal data derived from RIPA authorised investigations. A draft policy had been produced by council officers in response, and it is in Appendix 5. The inspector was satisfied with its contents, and it has been added as a section 12 to the council's policy and procedure document in Appendix 3, which the inspector thought was a useful guide to practitioners. The committee is asked to note the report and to approve the policy and procedure document in Appendix 3 with the additional section 12. I'm happy to take any questions, Chair.
Does anybody have any questions for Colin? Nope. No questions at all? Got off lightly there, didn't you? Right, in that case. Number 1, note the report of the inspector appointed by the Investigatory Powers Commissioner on the use of covert surveillance by the Council and adopt its recommendations, and 2, to approve the policy and procedure document contained in Appendix 3 on the use of powers under the Regulation of Investigatory Powers Act 2000, as amended by the additional Section 12 on data security and retention. Are we all agreed? Agreed. Thank you. That, I think, brings the Audit and Risk Committee, the first one that's been live for this municipal year, to an end. Thank you, all of you that have come here tonight and given your reports. And I look forward to seeing you and all the new members that are here tonight at the next meeting. And if there's anything that anybody wants to email me to have brought to the next Audit and Risk Committee, please do so.